Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets are up for the fifth straight day in a row. The Nifty trades above all its key moving averages, above the mark of 11,500 currently, and Yes Bank is the top gainer on the index. Eicher Motors is among the top Nifty gainers after UBS upgraded the stock to buy and also raised its target price. Metal stocks are the top laggards, so to say, in today's session, and Alcoa also cut its aluminium demand forecast for the current calendar year. And Z Entertainment will be reporting its second quarter earnings today. The stock is trading with gains of close to 2% right now. Good afternoon, Neeraj. Well, a U-turn, so to say, in the last half an hour. We're almost at the high point of the day.
Now the trend continues, Navneet. And never mind, of the last 4 days, at least, as we've been saying, that the market tends to get stronger in the second half of trade. Most days, it's actually tended to get stronger once we start this show between 2 and 3:30. Let's see if we can actually build on some strength from where we are right now, because we already have considerable strength for ourselves. We're trading at the high point of the day for the Nifty 50. The bank index is doing extremely well for itself too, and it's leading the charge about 1.65. And mind you, it's not led by HDFC Bank. They are up only about 0.5%, 1%. It's actually a clutch of other banking names which are doing so well. Just very quickly, the market breadth up on your screen for a minute before we get to the Nifty heat map. This is what the market breadth is looking like. As you can see, the gains have widened as the last 45 minutes to 1 hour has shaped up. Bring up the heat map very quickly and show you what's moving and what's not. There is weakness in some commodity names. Tech Mahindra is slightly off. BPCL takes a bit of a pause today. TCS, HCL Tech. So essentially, IT is underperforming. What is doing well? Yes Bank is up 16%. There is strength in IndusInd Bank, there is strength in State Bank of India, Axis Bank up about a couple of percentage points, so that brings up the banking names. HDFC about 1.5%, but that's about it. And Bajaj Finance at fresh life highs for itself, about 1.5%. I would say the real man of the match of the last 2 days has to be Eicher Motors, up very strongly in yesterday's session and up about 5% in today's session as well. Devina, green on the screen for the large caps by and large. Mid caps must be echoing the sentiment.
Yeah, they are, and individual stocks as well. Good gains, volumes are backing the kind of moves that we've been seeing. So we'll quickly start looking at what the indices are doing. 1% higher on the Nifty mid-cap index. Small-cap index is trying to catch up. There is some stocks that you need to focus on in the session. Some numbers that are coming in. So you are in the midst of the earnings season. You'll be keeping a close track on how stocks react to the numbers. PVR for one is marginally higher in trade, though we've got the results beating street expectations. Revenues were up 37% and the EBITDA was up 1.6 times. Irrigation, stock in focus, 15% down in the last 2 days. Today as well, seeing a cut in the session, 11 odd rupees is where the stock's trading at. And all of the insurance name, New India Insurance particularly, is a stock in focus. It's up about 13%. Volumes more than 20 times the last 20 days average. Other stocks, PNB Housing, with regards to the numbers, the stock is up about 6.5% because it was heavily beaten down in yesterday's trade. But asset quality remains stable. However, disbursements fell about 15%. Imami is the other one. The excitement around some interest from Blackstone and KKR is keeping the stock active. Volume buzzers, Bajaj Corp is active in the session. Promoters sell some stake to reduce debt. Stock's up about 12%. Adani Green continues to rally 10% higher, and RBL Bank is up about 9%. Other losers include Vodafone Idea and TV18. Vodafone Idea, some heavy selling in the bonds of Vodafone Idea, causing the stock to react negatively. And lastly, some stocks near the 52-week high, and it's a common thread across the board for all of these stocks, and these are all insurance stocks which are trading at their 52-week highs. So you've got an HDFC Standard Life, which is at its 52-week high, ICICI Pru and SBI Life, all of them trading near the 52-week highs. What else is happening in the futures and options space? Navneet is joining us to highlight that for us. Navneet.
Thanks for that, Devina. Well, key levels being breached on the upside, so that's positive. Even if you look at Nifty, remember how we were talking 11,500 is a resistance mark, which Nifty failed to cross at least in the last 2 to 3 sessions. And right now, we're firmly trading above that mark, around the mark of 11,550. And the next level that you can watch out on Nifty will be around 11,700. For Bank Nifty, which is up almost 1.5% right now in trade, it's also also crossed its 200-day moving average, which was somewhere about 28,830 thereabouts. So that's a positive sign. And Bank Nifty move on the index future side has come in with good amount of build up on the long side. So the futures open interest is up somewhere between 16 to 17%. And good news for bulls as well, as the India Volatility Index today has corrected for the third straight session. That's the key internals for you. VIX at 15.8 right now. And even if you look at the options data, today is the day for the weekly options expiry. We were looking at the range of 11,400 to 500, but right now index is firmly trading above the mark of 11,500. There is put writing which is seen at that level. So let's see. Now 11,500 should become the support level, at least on closing basis. In terms of stock futures, PVR came out with the numbers. The stock's up for the fifth straight session. So there was moves seen ahead of the numbers as well. A lot of build up seen on the futures side. Open interest up 24%. Futures are witnessing long positions, and the margins were pretty strong for the quarter gone by at 33%. Exide is the other one which is witnessing weakness for the second day now. The stock's down 4 to 5%. Futures are witnessing fresh short positions. Also, with the fall that we've seen, the stock's also fallen below its 50-day moving average. And of course, Aisha is the one that we've been talking since the morning session. The stock's up nearly 11% now for the week. With today's move, it's crossed its 200-day moving average, with UBS upgrading the counter and giving it a target price of 23,000. The stock future has seen OI build up of about 14 to 15%, indicating at current levels also there are fresh long positions being taken for this stock.
All right, before we go on and get our next guest on board with us, just want to quickly run through some of the other bigger movers in the session, and then we talk a little bit more about the numbers that are coming out. So Mastek, I think, just reported its numbers before we entered the show. So bang on in line, 24 odd crores in terms of profit versus 24 crores. No expansion in profit. Even the revenue numbers came in slightly low. I think 243 odd crores with the revenue numbers. The stock though has taken a big sharp knock, about 5 odd % under right now for Mastek. In terms of what they've got with regards to their overall EBIT margins, you've got the UK ops this time around showing you 15.5%, slight squeeze versus last quarter. North American ops at 10%, slightly better off than last quarter. Than last year, same quarter. 7.9% was the figure at that point. The stock is down 5.5%. We'll get the management somewhere closer to 3 to talk a little bit more about how the quarter has been, though.
Yeah, I reckon, but this again shows that if you deliver just in line or slightly below line, then the market is in a real mood to punish you. So that behavior of the market doesn't quite change. The other very interesting one is what we're seeing in stocks which have been beaten down the last few days and are bouncing back. So Eicher Motors, a case in point, right? One upgrade, it needed one upgrade without any other specific news for Eicher Motors to get 2 days of a 5% up move. That's a 10% uptick in the last 2 days. And I don't remember the last time in the last 6, 7, 8 months when Eicher Motors had a sustained buying spree of this nature. So really good move there. And in today's session, the likes of Yes Bank, India Bulls, again, one small trigger needed, and all of those stocks have done well. Today seems to be the afternoon that belongs to the India Bulls, Yes Bank, IndusInd Bank, and that troika. Essentially, those are the set of names that are done remarkably well in the session.
The Adani Group stocks also needed. At least Adani Green Energy is still managing to pump some gains after the incredible run-up that the stock has already seen in the last 3 months. I'm not quite sure as to what Adani Transmission, Adani Ports,
and Adani Gas.
Adani Gas. So what are all of these names doing? But Green Energy definitely. What a run, 83% now in the last 3 months. Stellar move that's coming. Adani Gas also intraday, as you can see, the midpoint of the day saw that spike coming in, now 1.5% higher. So in terms of the move, I think it's green, that's Adani Green Energy, that's seen a sharper move overall. Z, just to quickly look at the stock, what it's doing ahead of the announcement of its numbers. Very volatile, as you can see through the day, lots of peaks and troughs, and finally right now almost at the high point of the day, 1.9 odd % higher for Z. Difficult for a trader to see from an intraday perspective for Z, which is at 264 currently.
Okay, let's begin with the newsmakers of the day. Eicher Motors is amongst the top gainers on the Nifty. UBS has upgraded the stock to a buy from a sell rating, saying the down cycle is coming to an end. Darshan Mehta is here to take us to the rationale of UBS. Darshan.
Yeah, so it's an upgrade that's coming in from UBS. It has been recommended to a buy from a sell, and the target price has also been hiked 23,000 from the earlier 18,000. The main reason that they're saying is that they're convinced of a sequential volume growth coming in for Royal Enfield in the second half. They believe that the de-rating as well as downgrade cycle is now coming to an end for the company. Apart from it, the outlook is improving for the company, and they expect product cycle to turn with the BS6 norms that will come in. The volume growth will recover in FY21 with major product refresh. The margin concerns, according to them, are overdone, and declining commodity prices to support the second half and FY21 margins. And finally, they're believing that the EBITDA margin concerns that the company had due to launch of lower price variants are now behind the company, and Aisha probably reacting positively to the note that's come in.
Right. Darshan, thank you very much for that. So 20,000 already crossed by Aisha, just a matter of 2 trading sessions. Zee Entertainment will report its earnings today. The media giant is expected to post a healthy profit growth, even though the promoter pledge remains a key overhang. Forum Butt tells us what the street is pricing in. Forum.
Yeah, so the company is expected to report a healthy growth in its profit. Revenue is expected to increase by 8% at 2137 crore rupees. EBITDA is expected to decline by 3% at 692 crore rupees. Net profit is expected to increase by 24% at 478 crore rupees. Margins are expected to decline to 32%. Now looking at some of the individual factors, ad revenue growth is expected to remain subdued on account of declining ad spends as well as on account of negative impact due to FTA. On the overall level, ad vertical is expected to perform better only after the festive season in third and fourth quarter during this fiscal. Subscription revenue is expected to grow on account of the steady market share gains as well as tailwinds from NTO. EBITDA margins are expected to dip due to higher content investment initiatives undertaken by the company. Ad spend on the regional front is expected to grow on account of better pricing, as well as it is expected to grow above the average industry's average growth. Promoters' pledge is something which is going to remain an overhang on the stock.
All right, Forum, thanks a lot for bringing that preview with regard to what to expect from Zee. Remember, it's going to be an important earning which is lined up for today. And not only the earnings, of course, the street will also be watching out for the commentary with regard to the promoter pledge now. Almost 90% of the promoter shareholding has been pledged, and the stock was up 4 to 4.5% yesterday as well. And ahead of the earnings now, it's trading with gains of about nearly 2%. Good time to bring in our market voice then. We're joined by Sanjeev Zarbade of Kotak Securities. Hi Sanjeev, good afternoon, and thanks a lot for joining us on BloombergQuint. Let me begin with Zee itself, a counter which has been in focus for a variety of reasons, and in the recent past, of course, with regard to the promoter shareholding, which 90% has been pledged. Fundamentally, Sanjeev, we've been talking to various experts, market experts, who've said that there's nothing wrong with the business of the company. It is just that the promoter shareholding, which is pledged now, becomes a key overhang for this stock. What are you factoring in with regard to the numbers, and if you have any view on the stock?
Yeah, thanks for having me on the show. So I agree with the stance that you have regarding the fundamentals of the company. We've seen that the company's viewership in the flagship channel Zee TV has to some extent weakened in recent months. But other than that, we have not seen any fundamental changes or fundamental weakness in the overall scheme of things for the company. Having said that, what we have seen in the last few months is that because of the slowdown on the consumption side, the ad revenue growth has also slowed down. And what we are expecting from the company's numbers is very muted growth on the top line side, bit of margin compression at the EBITDA level, and we are actually looking at some decline on the EBITDA side on a year-on-year basis. However, profit after tax could be higher, but again that will be mainly because of the tax cuts that have been announced by the government. On the valuation side, given the fall that the stock has seen and the kind of franchise that we have in Zee TV, the valuations are definitely attractive, and given the kind of return on equity and return on capital employed that the business has, definitely it's a good business to have. Definitely, the pledge sharing is an overhang on the stock, but I guess for someone who wants to take a risk and own a good business, maybe he can definitely look at the stock, and we have a positive rating on the stock.
Okay, so that's a positive view coming in on Z. Besides that, Sanjeev, the other stock which has been in focus and we just discussed a while back on the show, and that's Eicher Motors. We've got some upgrade coming in, but talk to us overall, the slowdown that one has witnessed in the auto space in the last many months. Do you think now that's bottomed out, and in the coming months one could see a revival in terms of valuation after the correction that we've seen? Which are those pockets where you see some comfort sign?
So yes, we have seen slowdown on the two-wheeler side, but it's too early to say whether the slowdown has bottomed out. Maybe going into the next fiscal around Feb, March onwards, when the low base effect starts being favorable for auto companies, maybe at that point of time we can probably start looking at the companies. At the moment, it's very difficult to take a call because the sector volumes have gone down by almost 20% in the second quarter, and it will also hit the companies in terms of negative operating leverage. So we need to see how they are able to cope up with the situation, whether they are able to take some price hikes and hence preserve margins and so on and so forth. But I think we'll probably wait for 1 or 2 months to see any uptick in consumption spending, and definitely when we go into the next fiscal, the low base will definitely help them. So at the moment we are still a bit cautious on the two-wheeler sector.
Okay. What is it that you're liking, Sanjeev, in a market like this, where you feel it's worth investing in, even if it may be an expensive name which lets you sleep well at night and you don't have to think much about what happens to the company tomorrow morning, or whether it's going to be some of those smaller companies which were up until now ignored a bit, but they're still stable in terms of growth. But the fact that they fall in that bracket of being a mid-cap or a small-cap company has led to the kind of moves in the stock price.
Yes, so broadly I can answer that in 3 broad categories. One, the stock that we like and which will not give us sleepless nights are the kind of stocks that ITC, which is trading at very attractive valuations of almost 17 times, which is attractive for a FMCG company, and we don't see any significant risk on the tax front of the company. We also have a decent upside on the target price at 312 for the company. The other stock we like is Larsen & Toubro, which we believe that going ahead, the government has to step in terms of driving the overall infrastructure spend, because for the foreseeable future, the private sector will not be in a position to invest. And investment in infrastructure will definitely benefit companies like Larsen & Toubro. So that is one company which is professionally managed. There is no risk of pledge shareholding and so on and so forth, and which is also trading at a reasonable valuation. So these 2 stocks we definitely like in the large cap quality front. Then we see pockets of value in PSUs segment. So for example, on the utilities side, NTPC, Power Grid are trading at very attractive valuations, offering good dividend yields and reasonable earnings growth as well. Coming to the small and mid cap segment, now this is a segment where the valuations have really contracted. Also, there have been issues of corporate governance, and the earnings growth has also started to weaken. So if one can take a slightly longer time frame, we can look at some of the companies that are market leaders, because these are the companies that will definitely bounce back when the cycle turns. So some good companies who are market leaders in auto components, maybe in the 1 or 2 quarters their numbers will be weak, but once the demand upturn comes, these companies will definitely be a kind of multi-bagger. So that is one segment I will like in the small and mid cap. And also in the industrial space, we like companies like Voltime Transformers, which is into industrial transformers, and very well managed, strong balance sheet, attractive valuations, and so on. So that's how that's the overall space that we like at the moment.
What about insurance companies, Sanjeev? Because that seems to be the flavor of the month. You've got all of these stocks, be it New India Assurance, which is up about 13% today, whether it be ICICI Pru, HDFC Life, SBI Life, everything's, it's almost as if, this is a newfound space that's attracted everyone.
Yes, so the insurance sector, it's a new sector. For a common investor, it's very difficult to understand in terms of the valuations, and it will take some time to really understand the sector, the valuation terminology, and so on and so forth. Having said that, there is general consensus that the insurance is not as penetrated as other financial services, and there is good headroom for growth. Plus, the companies that are there in the insurance sector are large cap, big brands in the financial services like HDFC, ICICI, SBI, and it is considered to be probably safe to invest in these financial names as against get into some NBFC. So I think these are some of the reasons why investors are getting attracted to the insurance names. However, what we have seen in the recent data that has come is that the insurance premium growth has tapered down, or probably in fact fallen in the latest release. So that is something that we need to watch out for. We need to be cautious so far as the exuberance in these names are concerned. Anyway, the valuations are not reasonable. They have actually become quite premium. So we need to be a bit cautious. But having said that, if someone is taking a long-term view, then one doesn't need to be much worried investing in names like HDFC Life and ICICI Life Insurance.
Sanjeev, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Thank you.
That's the view from Sanjeev Zarbade of Kotak. As we speak, the markets are still perched at the levels they were trading at. Some of the commodity names may have come off, and BPCL as a stock is just pulling back a little bit after the big up move that it had in trade yesterday. Yesterday was up about 5% in today's session, just cooling off a little bit. Now remember, certain brokerages have come out with a note on BPCL as well. Macquarie, for example, has come out with a note on BPCL. And the government's, while it's keen on selling its entire stake in the company, Macquarie Capital believes that various multinational companies with ambitions in India may even put in the bids. But Aditya Suresh of Macquarie Capital has maintained a neutral rating on that stock with the target price of 500 from, which is hiked from about 425 odd rupees. And he's joined us on the phone line to talk about that. Aditya, thanks so much for joining in on BloombergQuint. Just prima facie, there were some voices who were talking about comparing the earlier deals that would have been done in India, outbound deals in India from India in the space, and if you do the dollar-rupee parity at the current levels, then they believe that there is a lot of upside left for a company like BPCL if indeed the divestment were to happen. What's your own prognosis about this entire news and what it may do to the stock?
Thanks for having me on this program. So clearly lots of excitement in this space, whether it's Total, Exxon, BP, Aramco, what have you. So specifically on valuations and what we think about BPCL. So we are considering 5 different valuation approaches in this research note, from some of the parts to peer multiples to transaction comms to recent IPOs, the more classic DCF, what have you. Now, all considered, our base case is 500, right? And this is, in our view, the most likely outcome. Now, is there a path to 700 rupees? Absolutely. The walk up from 500 to 700 is as simple as, in our base case, for example, we're assuming about 6 times EV EBITDA for the refining division, 8 times for marketing. Let's say we put refining at 8 times, and let's say we, which is similar to the Aramco Reliance kind of transaction, and let's say we assume a 10% type control premium, right? just those two kind of dynamics gets you towards 700 rupees. So if I had to kind of put odds on that outcome, though, I would probably be at about 10 to 15%. Our base case is, as I said, 500.
And this base case, of course, takes into account what is, according to you, the most ideal deal at the most ideal valuations that you can think of within the space.
This is, if we were to value BPCL, or if we were to put a bid on BPCL, this is as much as we would pay. That's kind of what it's reflecting.
All right. Aditya, just, if you're saying that there is, while obviously you're pegging it at 500, but you're saying there is a path to 700. If there is a path to 700, that means BPCL becomes the most expensive globally amongst its peers in terms of EV to EBITDA. Currently, it's probably neck to neck with what Fuji Oil of Japan gets in terms of its valuations. So how would that stack up then?
So we consider this in our recent research as well, and so on an absolute basis, I think that comment holds. But the way we think about this is to kind of adjust that valuation metric, whether it's EV, EBITDA, or price to book. We prefer price to book. So the way we look at this would be, say, price to book versus forward ROE expectations. And if you plot all the EM refining marketing companies, BPCL is in fact on the line of best fit, right? So we don't see BPCL as being excessively priced at today's levels. So the 2.5 times whatever book and the 20% ROE which we have is consistent with what the broader sector would trade on.
Just to get a sense from you, obviously now the excitement of privatization has come about for BPCL. There is a possibility of the government looking for divestment for IOC as well. Obviously not privatization, but going ahead and divesting some stake in IOC as well. Do you feel that there could be a catch-up in terms of this valuation play for the other domestic players and peers?
So not to put any company in play, but our core thesis here is that we'll be taking profit on BPCL at 350 rupees. This divestment trade made perfect sense. We frankly missed that trade. But at today's prices, what we are recommending investors do is to kind of switch into the likes of GAIL, HPCL, what have you. For us, for similar characteristics, there's far more upside on those companies.
Aditya, let's say if the deal were to happen and if we actually get an MNC player on board, and probably this will be the first time that a global player will have a substantial stake in an Indian oil marketer, because so far it's been held by the government, be it all the 3 oil marketing companies. If that were to happen, I know you've spoken on valuations, but would that also mean re-rating of the entire sector, because the valuation so far could also be suppressed because it was owned by the government of India, or rather is owned by government of India?
Absolutely right. And I think the bigger kind of comment to make there is just that, so analysts, including me, we've been kind of cautious on this entire deregulation dynamic, right? In particular at a higher level of crude prices, and the scars of kind of same time last year is clearly very fresh, right? So to the extent that you did get the foreign nationals kind of come in and invest, then that's clearly a big positive for sentiment across the space. And but even in that context, for us the more obvious trade at today's prices would be some of the other companies which we mentioned, including HP and GAIL.
According to you, Aditya, I mean, if you have actually done that kind of an analysis, what do you feel, or rather, who do you feel will have the most synergies in terms of being a partner and getting on board with BPCL, a global player? Because there are a lot of names that are floating about, but if you've managed to do any sort of calculation, which is going to be the best fit, according to you?
Yeah, look, so this research which we've published is in fact addressing just that, and we've engaged Macquarie's global super majors analyst on this to kind of get a sense of what do the global majors think about BPCL, for example, right? Or how would these assets fit in a global context? And so clearly growth is a key attraction, right? And BP's Bob Dudley has been out there and he's spoken about the great growth rates for fuel in India, what have you. There's gas and LNG interest that clearly fits as well. there are clearly lots of obstacles to consider, right? First is just the ticket size is $8 billion plus, right? This is not a small amount, and the majors are funding their own buyback programs, the dividend programs, acquisitions, example, Total, Africa, and Anadarko, for example. So the first point I wanted to make was that so it's not obvious to us that an international oil company such as Total, Shell, BP would make a bid. And one of the reasons was this ticket size and their own commitments to the buyback and dividend programs. The second reason why we think that the IOCs may not consider is just the asset mix for BPCL as is, right? So the price is clearly fuel retail today, not refining, right? And in fact, adding refining capacity overseas is not an agenda item for the majors. Their focus is on energy transition and the transition away from hydrocarbons, right? Total's CEO was at an India Energy Forum and he spoke as much. So refining is not really something which the majors are looking for. And BPCL's assets not really best in class or world scale. Culture, clearly a big issue as well. So, and then the deregulation dynamic, right? So if you kind of put all those pieces together, whether it's a ticket size, deregulation, uncertainty around that, if you are taking a 30-year view, culture, the asset mix, energy transition. For us, the conclusion was that it's more likely that if there is a bid, a national oil company is probably more likely than an international oil company. Within the national oil companies, we clearly know that Aramco is out there looking at downstream markets, whether it's Korea, Malaysia, India. Sinopec is another one which is looking at overseas opportunities. So perhaps if I had to kind of distill it down, we'd probably pick a national oil company and perhaps a JV within that. That's kind of our best guess as we speak.
Aditya, thanks very much. Really appreciate you joining in and putting that report in perspective for us. So that is what Macquarie has zeroed in on, a national oil company and a probabilistic situation of a company like Aramco. BPCL, though, is down about 0.5% right now. Let's get deep into the markets again then. 93 odd points higher for the Nifty. Nifty Bank 460 points higher right now. Shitij Gandhi of SMC Global Securities is joining us on the show right now. Shitij, very good afternoon to you. Let's talk about the index, which is now trading above 11,550. What could the trade be?
Yeah, rightly mentioned. Very good afternoon to everybody, first of all. See, we have seen a kind of a V-shaped recovery, almost a V-shaped recovery from the levels of, say, 11,100, and currently we are maintaining above the level of 11,550. From the, say, derivative point of view, 11,500 was a key resistance levels for the Nifty, as the call writers were actually holding their short positions at those levels. But the kind of short covering we have seen from the call writers in today's session, I believe the momentum in a coming sessions will likely to keep going on in Nifty, and we might witness 11,600 to 11,650 levels very soon in Nifty. And on a downside, I believe as far we are holding above 11,300 levels, the momentum is likely to remain bullish moving forward. And as far the Bank Nifty is concerned, yes, we have seen from recent sessions the Bank Nifty has been underperformer in a recent rally, but yes, in today's session the sharp breakout above the levels of 28,900 has been witnessed, and I believe in coming sessions 29,100 to 29,200 levels cannot be ruled out in Bank Nifty as well.
Okay, so that's the technical support and resistance level which Shitij had highlighted for Nifty and Bank Nifty for both. Shitij, in terms of individual stocks, specific strategies for this afternoon, what are you recommending in trade?
Yeah, looking at the momentum of the overall market and looking at the breadth of the market as of now, I would be comfortable taking long positions, and I have 3 buy ideas for today's session. These would be for say kind of a positional trade, say for 3 to 4 trading sessions. The first stock I would like to pick from the buy side is Jubilant Foodworks. Currently stock is trading around 1350 levels, and on a technical structure, the consolidation breakout above the 1340 levels has been witnessed in today's session. So I believe the momentum on a higher side will likely to continue in Jubilant Food for an upside potential of say 1400 to 1420 levels, say in 2 to 3 trading sessions. You need to keep a stop loss below 1280 levels from here on before taking a long position. And second stock I would like to take on a long side is from a private banking sector. The stock is Kotak Mahindra Bank. In today's session, we have seen, a kind of consolidation taking place into Kotak Bank, and the kind of a rally we have seen in Bank Nifty specifically. Kotak Bank has not been able to perform in today's session, but in coming sessions, I believe the kind of a tactical structure has been built up into the prices. I believe once a stock takes a move above 1620 levels, which is an immediate resistance level, once again the bulls will likely to keep control over the prices in Kotak Bank. So one need to keep a stop loss below 1570 from here on for upside potential of 1650 to 1660. The last stock again for a buy side would be from a private banking counter, and the stock is HDFC Bank. Currently stock is trading around 1224, 1225 levels, and on a tactical setup the stock has built up a symmetrical triangle pattern on a daily charts, and the breakout above the same has been witnessed in today's session as well. So I believe the momentum on an upside can take prices towards 1265 to 1270 levels in HDFC Bank. One need to keep a stop loss below 1195 levels from here on.
I think there's a small error on the call. Shitij has a sell call. It's a buy call on HDFC Bank, right?
Right.
It's a buy call on HDFC Bank, by the way. The target's out there at 1270 and the stop loss at 1195. Okay, before we get into Kunj Bansal, he's waiting by, but Ashish Kelkar of Kiran, Jadhav and Associates also with us. Ashish, a quick perspective on the Bank Nifty or the Nifty, whichever you are trading today, and then your stock ideas.
Good afternoon. See, overall chart structure on Nifty and Bank Nifty, we had given a buy call on Nifty when the Nifty breached 11,500 on the higher side, and the target which was given was around 11,570. Now we are very near to 11,570, so fresh buy signal is avoided. I would recommend to hold on a long position, do not take any kind of short position. Now the Nifty range for me would be 11,500 and 11,600.
Okay, so those are some technical levels going from Ashish. But in terms of individual stock ideas, what are you recommending in trade?
Currently, my first stock would be Bata. Bata, which is giving a very good rally as of now. Currently, it is trading at around 1737. I would recommend a stop loss of 1327, which is just 10 points below the current market price. And the first target which I can see is 1751, and the second target would be 1762. This is my first stock. The second stock I would recommend is Bajaj Auto. This stock is also doing well. So if someone go ahead and buy Bajaj Auto at the current level, my target, the stop loss would be 3030. First target 3150, second target 3175, which should be achieved in 2 trading sessions.
All right. Kunj Bansal of Sarthi Group is also joining us on the show right now. Kunj, great to have you this afternoon with us. How have you been reading into the earnings that have been coming out so far? It seems like the momentum has been picking up. It doesn't look all that drab as was anticipated before the start of the earnings season. But is there any specific pocket of interest for you now?
So we have had very few results, which is obvious. We have hardly, come in the first fortnight of October after the quarter end. Now, of those few results, mostly are in line. So what I mean by that, and which is obvious, is that neither are there any negative surprise. If at all marginally positive surprise, one can possibly say from the consumer sector, depends what is the outlook that you had made. But certainly till now there are no negative surprise. The results are in line with expectation. The expectation was of a flattish to low mid-single digit growth, and that's the kind of growth we have seen. I think a larger part of the result season is yet due, and that is where we will have to keep our eyes upon. Some of these spaces where the results would be worth watching will be some of the larger NBFCs as to what kind of growth rates they have been able to grow. Obviously, because of the reasons that we have been seeing for last 4 quarters, NBFC space has been undergoing stress, partly because of money availability with some of them, not all of them. The larger ones are sitting pretty on liquidity. Then the NPA issues, and then the third is the demand issue. So while some of the NBFCs which are surplus of liquidity, which are flush with funds, even if they want to lend, the borrowers or the buyers of goods are not there. So whom do they lend to? So that is a space that we will have to watch out for. Public sector banking space, we'll have to watch out for continued asset quality issues that could be there. And of course, consumption space is something that will have to be watched out for continued growth numbers. Let's keep in mind that the paint companies had reported surprisingly good numbers for last 2 quarters against the normal trend. So that is another space which will be interesting to watch out for, that do they continue to kind of go against the trend, or their growth rates also fall. So that is something that is to be watched out.
Okay, that's paint companies. Remember, both Berger and Asian since the last quarter have really spiked up. Valuations have really gone through the roof. I believe Berger now surpasses Asian Paints in terms of price to earnings multiple, and both of them are in excess of 60 times. So you really need to watch out for how valuations play out for some of these companies. 3 months, 51% for Berger Paints. Aside from that, Kunj, are you expecting autos to be a disappointment yet again?
So autos actually is a fairly simple sector to predict numbers and to prepare the financials and the expected financials rather, mainly because their monthly sales numbers are also always available. And if we look at the monthly sales number of July, August, September, we have continued to see degrowth in and around 20% for almost all the sub-segments of the auto sector. So that is already built in the expectation, that is known to the market and is already built in. So I don't think there is going to be any negative surprise there, neither could there be any positive surprise. The two things that will have to be watched out is the margin trend. So that is where we could see some divergence from the consensus expectation or from the individual expectation. In some cases margin could be better, in some cases they could be worse, depending on how the inventory of the raw material has been managed and how the cost efficiencies companies which have been continuously trying to reduce their costs of operation because of the pressures are able to manage, and as a result has that added to some part of the profitability. So that is something that will have to be watched out for. As I said, in terms of top line, I don't think there will be any surprise on the negative or the positive side. The other space within the broader auto is the auto ancillary numbers. So while auto ancillary is obviously the domestic sales is directly linked to the domestic sales numbers of the auto OEMs, but some of them have exports business anywhere in the range of 20-25% to going up to 60-70%. Globally also, auto industry has been going through a slowdown, so even that is not something which is not known or which is hidden. So but still, if somebody has been able to improve their wallet share out of the foreign supplies, out of the exports, and as a result improves better than expected sales, that is something that will have to be watched out for.
Okay, that's the view in the auto pack. In fact, while we are at it, pull up Force Motors as well. The company just came out with its numbers, I think half an hour back or so. The stock touched 52-week low once the numbers came in, and it's not seen any sort of recovery. It's at days low, down 1.5%. The revenues were down both sequential basis and even on year-on-year basis. Sequentially, I think it's down 6%. The margins for the quarter came in at 5% versus 8%, which was seen in just for the first quarter of this financial year. So it's a deterioration that you've seen even on sequential basis. All right, just want to mark few stocks before we move ahead. All your beaten down stocks are seeing recovery today. So of course we've highlighted something like Yes Bank, which is up 17%, but look at Indiabulls Housing is up 15% in trade right now, and RBL Bank, the other beaten down stock, has rallied 11 to 12%. RBL is now at somewhere about 289, and some of the other stocks like Piramal Enterprises, which has witnessed relentless selling pressure in the recent past, is also seeing some of a recovery. That's up almost 6% as we speak. Moving ahead, the other stock which is in focus is Bandhan Bank, and that's down, by the way, for the second straight day running. Macquarie has come out with a note on Bandhan Bank. It expects the stock to see downside from its current levels. Shefali Malik joins us to take us through the details of that report. Shefali, what are the concerns that they've highlighted?
Well, it's a very interesting report because they are highlighting a couple of data points and interesting statistics in this report. First, they are talking about the concerns of over-leveraging, which has been talked about in last couple of months. They're saying that very clearly West Bengal is clearly over-levered as their portfolio comprises large-sized loans of ticket size of about 60,000 rupees plus. In comparison, Tamil Nadu has less than 2% of its portfolio in this ticket size bucket, with 37% in 25 to 30,000 range. And they're saying that microfinance demand has not been impacted by the macroeconomic economic slowdown in the recent times, as the sector has grown by about 33% on a YOY basis. But they are maintaining a non-consensus high conviction underperform rating on Bandhan Bank, given the extreme concentration in eastern regions. West Bengal alone is about 50% of their AUMs, and like I mentioned earlier, West Bengal is clearly over-levered. Along with that, declining customer exclusivity, less than 50% of sole banking relationships versus about 70% a year ago, and significantly higher than industry ticket sizes. Given all these factors, they are uncomfortable with Bandhan Bank at the current levels, and at the current valuations, according to them, there is simply no margin of safety, and hence the underperform rating.
All right, Shefali, thanks very much for that. That's Bandhan Bank. Remember, the stock has witnessed tremendous activity over the last few days. Today's session sees a slight muted performance, 568 on the counter. Metal stocks are, on the other hand, bucking the trend in today's session. While Alcoa met estimates in the third quarter, they have also cut their aluminium demand forecast for the rest of the year. Nikki Mirjananish is joining us with the key takeaways of that. Nikki.
Sure, Devina. Metal index as a whole is a little down by more than 0.2%. But then if you look at something like Analco, Hindalco, Vedanta, they're all down in trade. Specifically, the losses are larger for Analco. Alcoa has come up with the results where typically the results, if you look at the top line and the EBITDA performance, they're down by 5% and 15% sequential basis, was pretty much in line with what the street was estimating. But then the real concern is the guidance, where the company suggested that they expect a degrowth in the aluminium demand overall for 2019. They've given a degrowth number to that in the range of around 0.6 to 0.4% as compared to the estimates of growth number of 1.25 to 2.25%, primarily driven by two things. That's the worsening macroeconomic condition, the slowing global automotive demand, and US-China trade war concern. Apart from that, second point that they've highlighted is the alumina deficit, which they're estimating to go higher in 2019 as compared to the one that they projected. On back of that, they have actually gone ahead and placed their capacities now under review. They're going to be placing under review 1.5 million metric tons of smelting capacity and 4 metric tons of refining capacity as a whole, which in turn is expected to have some amount of bearing on the LME prices. And given that the domestic producers, aluminium producers, have some amount of sensitivity towards these aluminium, we are seeing that amount of traction, or rather the weigh down effect of that on Nalco prices right now.
Okay, Nikki, thanks a lot for bringing those details with regard to Alcoa's numbers as to how they've cut the demand forecast as well for this calendar year, which has had some bit of negative reaction for Indian players as well, for the likes of Hindalco, as well as Nalco is battling its own issues as well due to a shortage of coal at one of its plant. Kunj, come in here Kunj, come in here with regard to the metal space, which is, as it is not doing well, and of course they it does replicate what happens in the global markets as well. We've seen even the steel prices, the spreads are coming lower. For aluminium now, Alcoa has cut the demand forecast for this calendar year. The prices have been correcting. Probably it could give you some bit of valuation comfort, but one has to wait for the cycle also to turn. So do you think the cycle may have bottomed out, or there is more pressure left when it comes to these LME prices?
So 2-3 things, not in any particular order, I'll try to address your question. One is, as far as cycle having bottomed out, it is always difficult to predict. More so difficult to predict in the current circumstances because of the ongoing US-China trade war. Now, that is obviously having an impact on the global demand, having an impact on demand from China, which used to be a major driver for the commodity prices. So that doesn't seems like it has bottomed out. So that is one part of it. The other part, you rightly said that the company's performances, and in fact more than the company's performances, the stock price performances are directly linked to the commodity cycles or the commodity prices. Now, as a result, what has happened is, if we look at the stock price performance of these companies, mainly metals, commodities, over a longer period of time, they have hardly given any return to a medium-term or a long-term investor, even if he has remained invested for 3, 4, 5 years or more also in some cases. So as a result, what happens is, are they no-touch stocks? No, that's not the case. I think these are traders' delight. All the metal, all the commodity stocks are traders' delight. They know their risk. They are, I'm assuming they are smart traders, so they know their risk, they know their stop loss, and that is where I think they are the ones who can catch these cycles of the commodity stocks. Now, these cycles are available for all the time periods, right from intraday to 2-3 days to week to month or to 4-5-6 months, like that. So these are the stocks. This is the sector for these kind of market participants, these kind of traders. I don't think for a medium-term investor or long-term investor anything is there. And since nothing is there, there's no point trying to apply your mind to finding out, has the cycle bottomed out, has the cycle peaked out. It doesn't matter.
Okay, that's on the metal space. Bajaj Consumer Care, just pull up that stock as well, was in focus over the last 2 days when it started, I think, the day before when 22% stake was sold via some block deals. The promoter is selling shares to bring down debt. The stock tanked about 13% on that day. Post that, 2 straight days of gains coming in for Bajaj Consumer Care. Yesterday was, I think, closer to upper circuit, and today's session almost 7% higher, 261 on the stocks. Shitij, are you tracking this one on the charts?
Yeah, rightly mentioned. I was looking at the charts of the Bajaj Consumer. The day before yesterday, we have seen the lows coming into the stock around 195 after the news coming into the market. But yes, once again, almost the losses the stock has witnessed, it has been vanished out from last 2 trading sessions. But at current juncture, I believe on a higher side, once again 270 to 275 zone, this will be the key resistance level for the stock, as a 100 days exponential moving average on daily charts is placed over there. So till the time we are trading below 270 levels, I don't think so the investors or the short-term traders also should get into the stock at current levels. But yes, on a dips towards 250 245 levels, once again, which is a key support level for the stock, one can open an opportunity for creating a fresh long positions, but on dips particularly.
Federal Bank and an RBL. RBL is more active in today's session nonetheless. Federal Bank reported its numbers yesterday. You feel that RBL now could see a new leg of a move on the upside, and therefore you might actually be one step ahead to take a positive call on this one and buy into the stock right now? Shitij?
For RBL Bank, right?
Yes.
Yeah, rightly mentioned, the kind of short covering and the volumes have been seen from last 2 to 3 trading sessions. I believe the worst has been a bit limited for the stock for say coming 2 to 3 trading sessions, because the kind of volumes and the kind of open interest build up I can see in today's session with a rise in price, I believe the momentum play can be taken into RBL Bank. I can see the upside potential towards 315 to 320 cannot be ruled out, say in 1 to 2 trading sessions. So yes, almost the stock has risen almost more than 11% in today's session. So yes, but still the risk reward is favorable. So from here on, I believe 275 would be the key support levels, which can be placed as a stop loss levels from here on. And on a higher side, I believe 310 levels cannot be ruled out in coming sessions.
PNB Housing Finance is up about 9% now and trading at the high point of the day. The last 2 days have seen a bit of a return to that slightly not the top preferred variety of NBFCs, because Piramal Enterprises is up about 6% as well, and there is strength in Edelweiss for the last couple of days too. So some bit of that risk appetite of sorts returning. Let's see if this lasts or no. Kunj, if you were a buyer, would you look to buy in this space, or would you stick to the tried and tested? Conversely, let me ask you, if you think that the valuations of some of the high-priced financial names are shooting through the roof, would you take some chips off the table and try and replace them with some of the lower valued financials?
Yeah, so if you permit me, I don't have a straight answer to that question, or put it in other words, to arrive an answer to your question, let me try to approach it from 2-3 angles. One is the market. Now, we are at a market wherein we have again seized the indices coming up. And this despite the fact that it is well known that as an economy we are going through a slowdown. The quarterly numbers that are coming up are weak till now and are expected to be weak. So there is already a contradiction between the market movement and the results. So that is one. Two, as a country, as an industry, as economy, as a market, whatever we call it, we are going through a lot of news flows. Some right and some are attached to that fake news or perception or rumors. Now that news flow is something which is causing real havoc in case of some, as I said, in some cases maybe rightly and in some cases it may not be rightly. And three, of course, within the overall slowdown, there are business segregation, where are some businesses which are continuing to do well or which are actually able to, are in that strengthened position of being able to take advantage of the weakness and become more stronger, and some obviously will fall by the wayside. So that is the situation in which we are there as a market and as an economy. Now, what happens is, as an investment strategy, always one has to segregate himself that whether one is taking a trading outlook or one is taking a medium or a long-term outlook. I think for a trading outlook, it's always good to bet on these kind of stocks which are going through a news flow and have fallen sharply, and as a result may give you a technical or a trading rebound, either simply because of the sharp fall or because of some positive news coming in or some solace coming in, and you can make some money, quick money, and get out. But if you are not having a trading mindset, or if you are not a trader, if you are looking for a medium to long term investor, you have to be very clear that the news flow attached to that one is not negative. Rightly, as I said, you can't believe in rumors and fake news. So that analysis you have to be in a position to be able to do. If you are not in a position to do, probably it's better avoided for the time being till the cloud is clearer around such names or stocks, which obviously shifts the interest of the buyers to the safer names. And that is where we have seen that the valuations come buying interest of those stocks whose universe is getting smaller by the day, whose numbers are getting smaller by the day. Unfortunately, they are continuing to move up, their valuations are continuing to go up. But that is where the market is. And I think the strategy will also have to be keeping all these factors in mind, and accordingly keeping the risk reward and the mindset of an individual into mind.
Okay, that's the view coming in on the NBFC space right now, and we've seen a sharp recovery. By the way, the markets, we are at the high point of the day, 11,560 for Nifty. Bank Nifty also trading pretty close to the mark of 29,000. Moving ahead, we've got a management joining us. That's Abhishek Singh of Mastek, who joins us. They just declared their numbers a while back. Hi Abhishek, good afternoon, and thanks a lot for joining us on BloombergQuint. Not looking like a great quarter. I think the quarter one was also impacted because of uncertainties around Brexit. UK market is the one from where you derive 75% of your revenues. There's a sequential as well as a year-on-year basis substantial declines seen when it comes to revenues from that market. Take us through what went wrong. Is it solely Brexit or something else as well?
Yeah, hi, good afternoon, and thanks for having me on your show. I think the jury on this result has to consider certain factors. For us, the way we looked at it is it's a fairly good quarter considering the environment that we are operating in. It's what started as a political decision and a political crisis has become a full-fledged economic and business challenge given the Brexit uncertainties. And amidst that turmoil, the reflection of that on currency and stuff, our ability to stabilize the ship and deliver a flat performance both in terms of quarter-on-quarter top line as well as bottom line, that took some effort. That said, some of the underlying aspects of how we are changing our cost structure or adjusting our business to address these challenges, I guess that's where the true win is. And what's causing a disproportionate impact on the business due to Brexit also presents an opportunity as this challenge stabilizes over the next 3, 6 or 9 months and gives us a disproportionate opportunity to bounce back.
Since the first half of this year has not been great for a company like yours, do you expect any sort of meaningful reversal to come by in the second half, or the growth pattern will be the same that we've seen?
So we would go by the lead indicators that are out there. If you see the way the order backlog continues to grow, and a lot of that composition still comes from our existing customer, which continues to repose faith in us in our delivery quality. The order backlog followed by the pipeline continues to be strong as well. And the way we have adjusted our cost structure, I think we are more nimble and more agile to deliver to the customer requirements. Now, the business is not just about a couple of quarter performance, but it is about the long-term strategy. And at this point, the way we see it, we are fairly confident as management team, having continued to make investments both in the leadership as well as the digital skills that are needed to deliver the business.
Let's talk about margin performances as well, which has seen a drag. So would you say that the margin performance will also normalize? I mean, if you're saying don't track it on a quarterly basis, and at 9.5% EBIT margin compared to about 11% in quarter one of FY20, do you see that normalizing, or this probably, keeping in mind that there are going to be a few more quarters of weakness, will probably settle around this marker for some time?
So on a long-term basis, or for that matter, even on intermediate-term basis, we do believe that this will adjust upward as the revenue starts to flow in. The significant reason, obviously, was the wage hike. The most easiest decision for any of us would have been to defer it, given the economic situation. But this is the digital workforce, and you have to continuously invest. As we made investments in the leadership team, we accorded the wage hike to the employee base as well, despite the visibility of the runway, despite the Q1 performance. So if you look at it, our confidence in the business is there, and that reflects in the decisions that we have made. That said, we see it adjusting upward in the next 2 quarters.
Wage hike, I think, is probably not a company-specific issue, but an industry-specific issue. And a lot of IT companies have been tackling it for multiple quarters now. So in that sense, would you say that this should have been something which is not new? And to attribute the slip in margins only on the basis of wage hike may be slightly inaccurate?
Yes and no. It is industry-wide phenomena, that's true. And as industry, we have evolved many different ways of addressing it, spreading it across the quarters. Certain grades and below get it in certain quarter, senior management and above gets it in different quarter. I mean, we have done one of it, all of us have done one of it for sure. But that said, the perspective I'm putting across is our ability to invest in and bringing a chief business officer early in April, followed by chief revenue officer for UK business, and in between the head of Americas. If you look at it over the last 6 months, where you see the business performance being pretty flattish, we have accorded ourselves the SG&A investment, which is significant for the size of the company that we are. So I would continuously draw your attention that the business is not about a quarter or 2. Business is about which zone are you in, and do you believe you have a good strategy, you have a good opportunity. And on both counts, we feel fairly confident. Yep, the margins have degraded, and we are uberly aware that a few things have been done to even offset it, and in coming quarters would be testimony of that.
Okay.
I just have one question, and that is typically the visibility that almost any company has about what the next 3 or 4 quarters could throw up. Do you have that visibility, or is it difficult to predict 4 quarters out?
You look at your 12-month order backlog, it continues to move in the positive zone. It has grown 3.5–4% in constant currency terms over quarter on quarter. And last quarter as well, it grew. So if you go by the lead indicators, it's a fair bit of indication out there that the business is in the right zone as we are winning businesses and solidifying the customer base we have. We feel fairly comfortable about it.
You do believe that there is visibility on business as well as order inflow for the next 12 months, and there is some predictability to that as well?
That's right.
Okay.
Just a last question from my end, Abhishek. In terms of North America operations, we've seen some bit of uptake. You've added 11 clients in this quarter. If you could tell us, since there is so much uncertainty in the UK market from where you derive majority of your business, will there be a conscious effort going ahead to increase revenues from the North American market then?
Absolutely. As a matter of fact, if you see, we've continuously made investments as the head of Americas. Raman came in on board early June, and we are solidifying that space further with a senior management member moving overseas as we speak. The sales reach continues to be invested upon to help cover the market and accelerate what we have been able to build over the last 6 to 9 months. So absolutely, US is a strategic market. That's not only from a geography diversification point of view, but also from the point that the digital commerce capability we have, the most significant usage of that scale is in that market. So yes, we'll continue to put significant emphasis on that market.
Okay. We leave it at that, Abhishek. Thank you very much for joining us and best of luck for the upcoming quarters. And as we speak, I think TVS Motors reports its second quarter numbers. Revenues have come in at 4,350 versus an estimate of 4,320. The stock has shot up in the session, so it has managed to meet the street expectations, at least with regards to this revenue numbers. Profit numbers also should come up shortly. 7% now, 442 is where the stock is trading at. We'll wait for those details to come out, but in the meantime, let's also get in Sharad Dubey with his list of the Fab 4 stocks. Sharad, good afternoon.
Good afternoon, Devina. The first stock I picked up is PNB Housing Finance. The stock is up more than 5%, snapping its 7-day losing streak. This is based on the news that it has risen due to its Q2 updates. Now, if you see the disbursements, that has actually come down 35% sequentially to almost 4,970 crores, with your GNPS coming in at 0.84 versus 0.85% on a quarterly basis. Apart from this, the AUM has stood at around 90,000 crore rupees, and the loan assets stood at around 75,000 odd crore rupees. Up next, we're having Indiabulls Housing Finance, which is up almost 14.5% after CRISIL affirmed its ratings, with the long-term borrowing coming in at AA+, while the short-term borrowing facility is coming in at A+1. So basically, they stated that the company has a liquidity of almost 18,500 crores, which will be enough to pay the debt repayments until September 2020. And also, the company stated that the company has received sanctions worth 5,200 crores to raise via loans. Up next, we are having Edelweiss Financial Services, which is up almost 4% after CCI approved Cora Master Funds investment of almost $10 million. Almost $75 billion for a 10% stake in its Edelweiss Securities. And the last stock of the day we are seeing is Manappuram Finance, which is up almost 5.7% after fresh log was seen with a high open interest of 20% and the volumes trading at almost 1.5 times its 20-day average. Back to you.
Right. Thanks a lot for that, Sharad. The TVS Motors numbers on your screens, the Q2 earnings, the revenues seem to be largely in line, maybe 20-30 crores higher, but which is hardly anything. But the bottom line number is substantially higher, 255 crores versus estimates of 152 crores. Now, keep in mind, as we learn, there are a couple of one-offs which might be impacting these numbers as well. So you've got to keep that at the back of your mind. There's some big news from the global arena as well. We'll get to that in a bit. Maybe we'll try and get a phone or two, or maybe cut to network as well. But first, TVS Motors, because that's immediately at hand. Strong numbers. The stock is reacting. Mayuresh Joshi of William O'Neill with us on the show. Mayuresh, good having you. Thanks for joining in. The revenue numbers seem to be in line. Bottom line propped up maybe by one-offs. Yeah. Exceptionally higher, 100 crores higher than estimates. The stock is duly reacting. Your initial thoughts?
No, sorry. I mean, you duly have to do the one-off adjustments, right? So if you do the one-off adjustments, I think it would then more or less fall in line. Again, largely what happens in terms of their margin guidance, I think is going to be very, very critical, because they had guided for a double digit. That has not happened over the past few quarters. The industry is going through painful times. But I think a decent set of numbers considering the scenario that we are in, right?
And 9% up. By the way, mind you, some of these two-wheeler companies are in focus. TVS was active yesterday as well on back of Bajaj Auto's announcement. But these numbers are quite spectacular on the bottom line, which is really quite something. Would you be a buyer here in TVS, or would it be amongst the favorites within the two-wheelers, or would you prefer a Hero, an Eicher, or a Bajaj Auto?
No, so I think there's always been an argument, right, in terms of the top two names actually getting focus all the time. But I think with the numbers and the consistency that TVS has probably posted, my own sense is that it would make a good bet for the long term. I think one would obviously argue that valuations probably might be a little bit on the hard side, or where the margin performance will be. But yes, I think I'll be tempted probably to look at TVS Motors.
Okay, some important news on the screen as well with regards to the European situation. Mind you, this whole morning the conversation on Bloomberg Network has been around what would happen if the Brexit deal is reached, and does that in any fashion aid the emerging market pack as well. Now we see the news that the European Commission President has said that UK and EU have reached the Brexit deal. We'll probably try and get you some perspective from the Bloomberg Network as well about how important this would be. But this, in all probability, from the limited understanding that we would have had, I mean, from a market's perspective, should not be negative, should be positive, because a deal of some sort is actually welcome.
There are lots more flashes on the Bloomberg. They're talking about getting the deal done. Brexit deal should be done on Saturday. Johnson also says that we have a great new deal that takes back control. UK will also announce EU carbon auctions as soon as auctions soon if there is a Brexit deal. And just take a look at what the pound is doing. Take a look at what, you've got the FTSE Europe as a pocket, and see what that space has been doing, because I believe that there has been some movement in, the stock markets as well, the equity markets out there. S&P 500 futures have risen on the news that the Brexit deal has been reached. Pound has climbed on almost 1%. So all of these, factors to be kept in mind. But a lot more, in terms of digesting this news and the implications that it has, should actually pull up some of these metal names, should pull up with Tata Motors. I think Tata Motors is the one that we're looking for right now.
It's up 13%.
It's up 13%. So that stock, and you can just see the kind of move, it's just like skyrocketed as soon as we've got these flashes.
Tata
and
Motors, Motherson Sumi has also gone up, I think, big time post that news, 10 to 11%, 9% higher for Motherson Sumi as well. So all these players, I think, which have exposure to that market are seeing good amount of recovery. Remember, now these are your beaten down stocks. It's a positive news for them, and hence you're seeing that sharp recovery coming in for all these stocks, be it Tata Motors or Motherson Sumi. TVS, of course, has gone up on back of the numbers, and I think in their press release, TVS has also given their margins for this quarter. It is not in double digits, it is 8.8%, but still markets have taken that with both hands. The numbers are looking better than what the street was expecting, so that's also sitting with gains of 8%. So good going, good news coming in from the global market as well, as the UK-EU reach the Brexit deal, which was they were negotiating for the past many days. Remember, there was an expectation that before the EU summit begins, they could be reaching a deal, which has now come by. Of course, we'll get you more details on that front. What does it mean for the global market? Of course, it will be a good news when it comes to global trade as well, especially from the UK market, which was taking a hit.
Yeah, and we've been getting a tweet going from Boris Johnson. We've got a great new deal that takes back control. Now, Parliament should get Brexit done on Saturday, so we can move on to other priorities like the cost of living, the NHS, violent crime, and our environment. So that's putting, signing the deal. I mean, obviously it's not signed yet, but Saturday is the time when they're looking at getting...
The deadline was October 31st, so they've managed to strike the deal much before that.
Well, a lot of other companies, smaller ones as well. I mean, Mastek, I wish Mastek would have been with us right now, because it would have been a really good conversation with him about what would happen. Yeah, he would have been happy. I wonder if Mastek, then Tata Elxsi, HCL Technologies, maybe not as much really, as badly, but Mastek, you can see that spike there. I think Tata Elxsi too benefits materially from this and should be up, yes, about 3.5% up. So some of these stocks are moving up. Ignore HCL Technologies, I mean, very diversified, so it doesn't really get impacted that much. But yes, some bit of revenues coming in from there. Tata Motors, of course, the biggest one, up about 11.5%. Motherson Sumi about 10% quite stark. Some of these auto names, some of the IT names are the principal ones which benefit out of this. Mayuresh, we don't know the nature of this deal, but purely from whatever you've read thus far, or gotten information thus far, is there a stock that you would take from a tactical perspective? Some of them have reacted already.
Oh yes, and again I think it's more sentimental at this point of time, because I think whether it's happening, not happening, or something which kept
happening
these
for
stocks
sure.
on.
They're saying that's happening for sure.
That was what was happening just 5 minutes ago, right? Now the deal has happened. So obviously I think the key beneficiaries are going to be Tata Motors, for example, or even Tata Elxsi, because I think a large part of the revenue does come through from Jaguar as far as the auto numbers are concerned, and there was a lot of uncertainty surrounding that. Tata Steel to a certain extent, because what happens with the steel players also will have an impact in terms of of Tata Steel's UK operations after the deal had got called off. And yes, I think you said the other IT players, I think Mastek, basically any company which has a reasonable amount of operations out of UK should sentimentally react to this news.
Okay, but no tactical calls out here. You refraining from doing that?
Not anything.
There's also some flashes coming saying it's unclear if Britain and EU can actually ratify the Brexit deal by October 31st. I mean, it needs the backing of the Parliament as well to go through. So all of those factors need to be kept in mind. This is definitely, you've got that one-time reaction to the announcement that has been made, but there has to be a follow-through. There has to be a confirmation that comes in on the back of this. We'll try and get you some voices to talk a little bit more about what happens, but clearly, some of these stocks have done phenomenally well right now in the last few minutes of trade. They've just seen a big spike. European shares also, I think just keep the focus on the European equity markets as the news gets digested there as well. You are starting to see European shares starting to spike as well.
I think the intraday of the FTSE would be showing you a definitive up move to my mind. Try and pull that up, the GIP function on the Bloomberg terminal, but 0.5%, a 1/4%, just not dramatic, but just about a 1/4%. But our markets too are doing much better. The Sensex is now up a whole 500 points, and I think trading at the highest point of the day. We normally take the BTSTs a bit later, and we'll do that for specific stocks. But Ashish, would you take a closing trade on the indices right now? The Sensex is up 500 points, the Nifty 131. Would you go out and initiate a long for tomorrow morning?
Are you talking about the specific indices?
I'm talking about the Sensex and the Nifty.
Okay, Nifty definitely, if I look at the overall chart structure, I already told you the level was 11,500 and 11,600. If in next just 10 minutes, if Nifty goes above 11,600, then definitely I will take the position home. I will carry forward my long position. If someone want to take a long position, I would recommend wait for another 5 minutes. If Nifty goes above 11,600 and remains there for at least 3 minutes, then only I would go recommend a long position to be taken in the Nifty.
Okay, we'll keep going and getting back to the implications of the Brexit deal being reached between EU and UK, and it looks like, as per all the comments that have been coming in, it is a fair deal. I think we can cut across to the network for the same.
That's a long-term positive. So if the hint is we reach this deal and we're going to reach another deal, a permanent deal that's a positive one, that's good.
Do you see any lessening of London's financial power over the last years? Unicredit, Eric, you're in and out of there. You write your acclaimed Sunday note from the shores of the River Thames and all that. I mean, do you see any lessening of London's power with this deal? They become ever more solidified as the financial hub, right?
Yeah, I don't think you can escape the conclusion that London will be somewhat less important in the financial sector. Some will move to the continent, but in my opinion, there's no conceivable outcome that will challenge London as the preeminent financial center in Europe for many years to come. It will not be that dramatic.
John?
Yes, but this is true. At the same time, as you've noted, that the regulatory and other reasons, the Europeans have effectively ceded international investment banking to largely American firms.
Right. Yeah.
The European firms, London-based European firms, are losing out every day.
This is really important, and I need to understand here that Eric Nielsen, folks, represents a major Italian bank as well. But Dr. Lipsky, this goes back to almost a Solomon model of American merchant banking and global banking from another time. We just got the 4 major bank earnings, and clearly in there they have an international expansion. Exactly. Can they do that with profit? Can you do all the emotion that the American banks want to do, including going into Europe, but can you do it with a profit model rather than a revenue model?
Yes, I think the answer is yes, and of course that depends on the outlook for the global economy in so many dimensions. But let me just step back and say, yes, I think the answer is it can be profitable, assuming there's no major disruption in the process of, let's call it, globalization for shorthand.
It's 5:47 a.m. in Washington, and we haven't even talked about emerging markets, right?
Yes.
We're forgetting emerging markets and the impact the dollar has on emerging markets.
Yeah.
And I mean, where do you choose the winners and losers? Is it the ones that actually have fiscal room that will come up on top?
Well, as you noticed, and very important in the IMF Global Economic Outlook, is the slowdown in the largest emerging market economies in China, in India, in Brazil. If these are not turned around, then the outlook for the emerging markets is more questionable in the context in which low interest rates in the industrial economies, the advanced economies, has produced a very favorable environment for capital flows to the emerging markets. So this is, if near term okay, in financial terms, not so good in economic terms, and a need to improve policies and make that more sustainable.
Eric.
Okay, let's get in a very quick perspective from Mike Ingram. He joins us right now on the phone line to talk about this. Mike, good having you. Thanks for taking the time out and speaking to us at BloombergQuint. There were two uncertainties, the trade war, which remains one, the Brexit deal, which is the other one. This seems to have reached some bit of a deal. How positive from an emerging market perspective?
Yes, good afternoon. I think this is actually quite a positive impact. It does play to the more general theme of a slight improvement in geopolitical tensions. Of course, within the last week, we seem to have had, at least some progress in Sino-US trade relations, and of course, Brexit has been another element in geopolitics, which has certainly, been a detractor from risk assets. And certainly, in terms of the UK, you can see a fairly immediate market reaction. There's a very vicious short squeeze going on sterling right now, and bearing in mind that UK equities have been a key underweight among global portfolios for a considerable length of time now. I dare say if that positive momentum continues in terms of UK-EU politics, we're going to see portfolio flows into the equity market as well. So yes, overall, I think this is quite positive for emerging markets.
Just want your sense as to whether or not this is it a bit too soon to rejoice? Because, they do need parliamentary backing, and the DUP has said that they've not changed their position. So do you feel that, this deal could get a little bit of a pushback from the Democratic Unionist Party?
Well, my understanding, and obviously the situation is extremely fluid, is that the DUP has lent their support to this deal. There clearly have been some tweaks right until the last minute, because the DUP's official stance until, I think, just over an hour ago, that there was still, problematic issues associated with this deal. Let's see what the deal is. If we can get over that hurdle, actually the next thing to negotiate, as I think you've alluded, is getting this deal through Parliament. And in that respect, my understanding is the main opposition, Labour Party, and bear in mind now that we're talking about a minority government. It hasn't really succeeded in passing any laws since Boris Johnson's tenure as Prime Minister. The Labour Party is insisting that their Labour MPs essentially be instructed, or in our terminology, whipped into a vote on a second referendum on Saturday. So, whatever the shape this deal actually is, there's a strong possibility that it will never be implemented. And of course, if we end up in a second referendum, it crucially depends on one, what question is going to be on that ballot paper, or questions are going to be on that ballot paper. If the only two options, for instance, are this deal or to remain within the EU, then it's quite possible that no Brexit occurs at all. And whilst that might be actually optimal in terms of capital markets, both for the UK and perhaps globally, I do fear that it will create an incredible amount of social tension in the UK for years to come. And ultimately, this may come to bite us.
Okay, Mike, really, thanks much for taking the time out and being with us. Before we discuss some of these plays and try and see if anyone can be bet on, since it's just 8 minutes left for trade to shut, let's first get in the BTSTs or closing strategies from our experts. I'm assuming a buy today, sell tomorrow. Shitij, I'll come to you first. Your top closing strategy.
Yeah, rightly mentioned. Like first of all, I would like to take a BTST for a Bharat Forge. The stock are already trading around 457 odd levels, and the on a technical parameters, on a daily chart, the stock has made a cup and handle pattern and given a breakout of the same. So I believe the momentum on a higher side should move on Bharat. It should move in Bharat Forge towards 500 levels. In fact, on a positional basis, and on a BTST as well, one need to keep a stop loss below 450 levels for upside potential of 470 to 472 levels. The next stock I would like to take again from a banking counter. It's once again stock is from banking counter. Stock is Axis Bank. Currently stock is trading almost at its day's high, and the kind of short covering we have seen in today's session after consolidation, I believe the momentum towards 725 to 730 levels cannot be ruled out, say in 1 to 2 trading session in Axis Bank. Need to keep a stop loss below 700 from here on to take a long position for upside potential of 730 levels.
Some closing strategies coming from Shitij. Ashish, what about you? Your closing bets would be any BTST or any STBT?
I have BTST, and the name of the stock is LIC Housing Finance. It has taken a U-turn, and the overall chart structure of today's intraday session is very encouraging. So I would recommend to go ahead and buy at the current levels. The stop loss should be 379, and the first target would be 387.5. The second stock is Dabur. The Dabur has also given us a very good chart structure for today's session. Now it has just given us a breakout of ascending triangle pattern formation. Buy as of now, 459 is the stop loss, 468 would be the first target, and 470 would be the second target for tomorrow.
Okay, so buy on Dabur, and the markets are likely to close at the high point of the day. Mayuresh, lots to chat on and a lot of questions, but since just 6 minutes to go for markets to shut shop, I'll ask you if there's any stock that you would like to discuss with us or with our viewers.
Oh, sure. So I think a couple of stocks which we are finding very, very interesting. I think they're coming right into our buy zones. So Manappuram Finance, I think if it crosses 145, I think there is a strong tactical chance that this stock might even move higher. Again, I think the numbers in terms of the AUM growth should be quite stable, asset quality should be stable, and actually they're looking at an investor for their MFI business. If that comes in, I think it's a huge addition from an earnings perspective. The other stock is Atul Limited, and though the results are out next Friday, my own sense is that their key segments, the EBIT margins have improved to 20-odd%. What really happens in terms of their capex plans and incrementally adds on to the top line quite significantly. And if you do a peer check with players like an Arti or a Deepak Nitrite, for example, I think they're very sweetly placed, 20-21% EBITDA margins, around 21% ROEs. So I think very, very stable company, no debt on their books, looks very, very promising. So I think Atul and Manappuram, if they cross those thresholds, as I said, I think are looking like very, very good tactical plays.
Okay, I just want to pull up New India Assurance. Remember, GIC, RE and New India were both locked in upper circuit with gains of 20% yesterday, and they are back with those sort of gains, 20% gains for New India. Mayuresh, very quickly, a thought on insurance stocks. Would you bet now at these levels?
Non-life, by the way. I just want to supplement Navneet's question.
All right.
No, because New India Assurance and the ones are the ones which have moved up.
So I think with the numbers that came out, right, ICICI Lombard's numbers probably just disappointed a tad bit. My own sense is that ICICI Lombard, again from a tactical play, I think if it moves 50-60 rupees more, I think 1300 is their make or break levels. If it crosses that, I think it's going to be in a very, very sweet spot. These guys, again, if you probably look at their exposure, crop insurance for GIC, I was just having a look at those numbers yesterday, 10,000 odd crores, marine is 3,000, 2,500 for motor and health. So I think you've got some issues on the crop part which might come up sooner or later. I think ICICI Lombard probably more diversified, crop has got curtailed downwards, health, and again third-party motor, I think that might be drivers going ahead. So ICICI Lombard, 1,300, that level goes off, it is going to go zoom up.
Okay. That's interesting. And by the way, ICICI Lombard yesterday, because of the Fairfax deal was tempered in today's session, I think that is out and it's up about 3%. But yep, interesting spot. Mayuresh, take a moment to thank you for joining us and giving us that perspective. Shitij, quick 30-second answer. Any of these insurance plays that you would want to take a trade on?
See, if I need to take a call from an insurance claim, the SBI Life would be on my radar. In yesterday's session as well as in today's session, we have seen kind of a long build up into the pricing, and stock has also given a consolidation breakout. So I believe the momentum should keep on going into the stock. On positional basis, I can see 945, 950 levels can be easily reached out in SBI Life.
And they've moved up. Okay, let's start wrapping up the markets, and we start off, not usually that we do this, but because of the news at hand, we start off with what the European markets are doing. And as you can see, I think they've inched up. FTSE is now up about 0.56%. When the news immediately broke, it was up about 0.25%. DAX is up 1%. This is the big news for the day, and I think conversations around this on the network will continue. We'll try and get you some slices of that as well during the course on the website of the day on the website. By the way, the mid cap, the large caps firstly, our markets, and ending the day very well, about 1% higher, 1.5% for the Nifty Bank, so no complaints. Broader markets too would have performed well, and the market rate should be positive at the close. So all good on this Thursday expiry day. Not too much of volatility in the session, which is actually a good sign. But let me talk about the large caps and tell you what's moved on the index. Yes Bank up a healthy 16% in the session today. There's strength in Tata Motors up about 13%, no doubt egged on by this news. And Eicher Motors, rock star for the last 2 days, up about 8% in today's session. Then some of the banking names, IndusInd Bank, SBI, Axis Bank, etc. have done well. Bajaj Auto about 3.5% higher too. So good going really for a lot of rate sensitive names. What's not done well? Very few stocks. IT is, by the defensive nature that it has taken a backseat today. So HCL Tech, TCS, somewhere down then Tech Mahindra is off. But aside of that, not too many stocks which are high beta and or rather more reactive and correcting to there. Largely, it's the day that belongs to the gainers, even though the gain is only 1% of the index. Navneet, what about the broader end of the spectrum?
Well, the picture's looking good, and there were a lot more gainers than losers that I have on my list. So let me start off with a stock we were discussing with Mayuresh, New India Assurance. For the second day in running, it's locked in upper circuit with gains of about 20%. And majority of the gainers today were also a beaten down stock. So from the likes of Indiabulls Housing, which rallied today, that stock saw gains of about 15 to 16, finally closing with gains of 14%. Motherson Sumi reacting to the Brexit news, and that stock's closing with gains of about 12%, almost at the highest point of the day. Piramal Enterprises saw a recovery in today's trade, so that 1465 is the level with 6% gains is somewhere it's going to be closing at. Adani Green continues to do well. The stock's been trading at its all-time high levels, 10% gains coming in there. And RBL Bank from the banking space saw a sharp rally. Some bit of short covering definitely on the future side, 12% higher. Berger Paints continues to witness long positions, and this stock's too trading at its all-time high levels, 3.5% gains. On the losing side, Bandhan Bank was down for the second straight day. Remember, Macquarie came up with the report we discussed during the show where they are not too convinced with the move. Shree Cement announced that they will be looking to raise some funds via QIP, and that will be discussed in the upcoming board meet. The stock did not react positively. Music Broadcast from the broader markets was the other stock, which saw selling pressure down about 7 to 8%. And lastly, you've got Nalco, National Aluminium, reacting to Alcoa cutting the demand guidance, and also the stock's been suffering because of unavailability of coal at one of its plant.
All right, so that's what you've got in terms of the individual stocks, but a very decent close for the equity markets, propelled by obviously the positive Brexit deal news. Nifty Bank up 1.6%, so 452 odd points. I remember it's also the weekly options expiry day, so you'll expect slightly higher volumes in today's session. Nifty 50 making its move towards 11,600 once again.
All right, let's also take a look at the market breadth, how that panned out, how are the advances and declines for the day. And as you can see, last hour or so, advances took over, and it's also almost 2:1 is the ratio that we saw in today's session. And looking at the Nifty contributors as well, what contributed to the 120-point rally that we've seen. And I think the gains were seen across the board, but still your biggies contributed once again. Reliance, HDFC, ICICI and SBI. The banking lot definitely rallied most, and TCS Infi, the ID pack saw some bit of profit booking in today's session. All three, TCS, Infi, HCL, saw selling pressure.
And the turnover then, finally, just to take a wrap out of how today's session went. So even the cash market turnover last few days closer to 34,000 is what we usually kept seeing. And today's 38, so it's definitely more positive on the back of bigger gains. And the F&O space, about 26.5 lakh odd crores in terms of the F&O market. Let's quickly get in some closing comments from both our technical experts. Shitij, let me come to you first as to what is the most important, crucial cue for you for tomorrow's session.
see the kind of recovery we have seen in market in today's session specifically, and the expiry has, the Nifty has given a closing above 11,550 mark, which is a positive signal for tomorrow's session as well. But yes, I believe the banking counter can outperform in a market in tomorrow's session as well, because the kind of underperformance we have seen from a private banks like HDFC Bank or Kotak Bank in today's session, I believe the next rally should be taken by the private banking counter, and one should keep an eye. On private banking counter. The name I have already mentioned, like HDFC Bank, Axis Bank, and the Kotak Bank. I believe these stocks should take the market towards new peaks.
Okay, Ashish, what about you?
As I mentioned earlier, tomorrow if we see the Nifty above 11,600, definitely the fresh entry can be done, and first target would be 11,685.
All right, gentlemen, we'll leave it at that. Thank you so very much, Shitij as well as Ashish. Appreciate you taking out the time. And that's the note that we end Countdown on. It's a goodbye and a thank you from Neeraj, Navneet, myself and the entire team that's put the show together. Thank you for watching.